But the only one that really stands out on the way up is Bajaj Auto, and we've seen a 7% move on that one, along with Tata Motors, of course, both of them reporting good numbers. But I believe we do have with us the management of Indian Bank. Talking about Indian Bank itself, it saw its net interest margin improve for the third straight quarter this time around, and higher net interest income as well as lower taxes also aided their third quarter performance. The bank also saw credit costs rise on a sequential basis. The stock is lower right now, so it'll be important to know what the management has to guide for going forward on credit costs itself and loan growth. We do have with us the MD and CEO of Indian Bank, Shantilal Jain, joining in to tell us more about the numbers. Thanks a lot, Mr. Jain, for joining in. And that really is the first question. You know, you had earlier targeted about 10 to 14% sort of loan growth. What's the outlook there? Do you maintain that? And on credit cost itself, I mean, what's the sense that you have? What kind of number can you guide for?
Yeah, good morning. Good morning. So our credit growth was 13%, is against the guidance of 10 to 14%. Under the credit, in all segments of the credit are growing on the equal space. Retail is growing 15%. Agriculture is growing 15%. MSME is growing 6% and the corporate 7%. As far as credit cost is concerned, the credit cost has come down significantly in the last quarter. And you see our gross NPA, net NPA number has come down. The net NPA has come down to 1%. So going forward, credit cost will be declined substantially.
Okay. All right. Mr. Jain, give us a couple of numbers first. You know, as you said, I think you're growing by around 13% approximately. That's within your margin, your guided band of around 10 to around 14%. For the year ahead, that's FY24, what kind of a loan growth you're looking at? And the point we get on your credit cost, that it's come down over the last few quarters. But on a sequential basis, it's moved up a little bit higher. So given that you're guiding for this number coming down further, what is the number you're looking at in terms of credit cost? Go ahead, sir.
You see our performance for the last 3-4 quarters. Every quarter we are growing between 12 to 14%. So we'll continue to grow at that space.
Okay.
First point. Second point, you see we are a retail bank. 62% of our book is a RAM portfolio, where all the component of retail, whether it is a housing loan, whether it is a education loan, whether it is a auto loan, whether it is a jewel loan, all are growing between 12 to 15%. So we'll continue to grow at that speed. Regarding the credit cost, what happens in this time the credit cost has come down, sir. Slightly cost has increased under the restructured standard asset. We have improved some provisions on the restructured asset. That is why it is improving. Otherwise, credit cost has come down significantly, and going forward also, since the net NPA, which was used to be quarter back 1.5, is now 1, and which was a year back around a 2 plus, has come down to 1. So credit cost will definitely go down going
Give
forward.
us the numbers, sir, on credit cost. What will it go down to?
Yeah, it will go down, sir, since my net NPA itself is a 1%. So naturally it will be below 1%. Na?
Okay, credit card will be...
Fourth point, just I want to add, sir. You see, last 2 quarters, our recovery is more than our slippage. Last quarter, our slippage was 1,300 crore. Recovery was 2,600 crore. Likewise, Q2, our slippage was 2,400. Recovery was 3,200. In a 9 months period, the slippage was 5,400 and recovery is 6,500. And going forward, the SMA number is also coming down. Collection efficiencies, we are maintaining 95. So definitely the credit cost will come down going forward.
All right. So the number that we can take forward from this is the fact that credit cost will be below 1%, even as the net NPA itself is at 1% itself. On gross NPAs, you had guided for about 7%, stands at around 6.5%. So we assume that that number is likely to stay within that range itself, right?
Gross NPA will also come down. The way we are every quarter,
okay.
Our numbers.
What will that come down to?
It should come down from the 6.5 level. It should be around 6 to 6.5.
Okay.
Okay. All right. Mr. Jain, given that you're going to grow at this 12 to 14% odd, do you have any fundraising plans, or do you believe you're adequately capitalized?
As far as our capital adequacy is, we are 15.74%. And if we add a profit of 9 months, it is around a 17%. So it is 150% of the regulatory requirement, first point. In the CET1 also, we are As against the 8%, we are at 160% of the requirement. So capital side, we are adequately capitalized. Our profits are adequate to take care of our credit growth. Even then, we have a board approval for raising 4,000 crores. So as and when the good opportunities will come, we will discuss among the board.
All right. And, I just wanted your thoughts on two things. One, your write-offs continue to remain high. Your write-offs this quarter were close to around 1,800 odd crores. Yes, we did see a decline quarter on quarter of about from 2,500 crores to around 1,800 crores. So why is it that the write-offs continue? That's point number one. And secondly, what kind of NIMs or net interest margins are you targeting going ahead? 3 plus, will that sustain?
Yeah. So you see quarter 1, 3.1, quarter 2, 3.2, quarter 3, 3.7. So going forward, our margins, which should we have given the guidance of 3%, now we will be better than 3% in the year as a whole. Presently, we are at 3.35%. So we should be able to protect that kind of a margin in the next quarter to come. As far as write-off is concerned, write-off basically is based on the gross NPA provisioning requirement and all, we take a call because we get a taxation efficiency on that. And you see my provision coverage ratio is at a 93.59%. So most of the accounts are virtually 100% fully provided for.
So you're saying that the NIMs will hold at these levels, right?
Yeah, we should be able to protect that.
Okay, all right. What about the NCLT recoveries in the next 6 to around 12 months? If you could give us a rough number on that.
Yeah, recovery is happening from the NCLT and recoveries from the NARCL will also happen from the NARCL. So we are expecting that 1,000 crore plus of a recovery will be come from the NCLTs in a year to come, not in a quarter. Okay. Quarter maybe 300, 400 crore or so.
Okay, so 1,000 crores coming in from the NCLT accounts, 300, 400 crores would be on a quarterly run rate. A total recovery would be close to around 1,000 crores from the NCLT bit itself.
And yeah, we have given a recovery target of 8,000 crore for a year. As against 8,000 crore, we are at 6,500 crore in 9 months. So in 9 months, our achievement is 108%. And on average, we are recovering around 2,000 crore. So we will be able to recover 2,000 crore in the next quarter as well.
Just two things I wanted to know. You said your corporate and MSME loan growth is around 6 to 7% against your overall loan growth of 14%. Is that deliberate? Are you looking to increase your corporate offtake of loans? And secondly, there is talk of PSU consolidation, mergers, acquisitions, etc. Do you think that is likely with your bank?
In a corporate, we continue to remain selective and choosy. Wherever we are having a good margin, we are taking an exposure in corporates. That is why it is 6 or 7%. And in the retail, we are getting a good margin, so we are aggressive on that front.
And any restructuring? Are you looking to merge with any other companies, etc.? PSUs? Is there any word?
Not yet. No plan yet.
Okay. Thanks a lot, Mr. Jain, for giving us all those details. Targeting NIMs upwards of 3.5%, 14% loan growth will continue, asset quality will improve, credit costs sub 1%. That's the management of Indian Bank. We take a short break, come back, we stay tuned as we discuss market technicals with Sachchidanand Uttekar after this short break.